Hello everyone, and welcome back to the channel. Today, we're diving into some absolutely staggering news coming out of the silver market. If you thought the precious metal space was getting a little sleepy, think again. What is happening in Shanghai right now is a seismic event that could have massive ripple effects across the entire global financial system. We're seeing something truly unprecedented, and you need to know about it. So, what's the big news? Silver in Shanghai just blew past $77 an ounce. Let me repeat that, $77 per ounce. At the exact same time, the spot price for silver in New York and London was hovering around the $72 mark. Do the math, and you'll find a jaw-dropping premium of over $5 an ounce. This isn't a small discrepancy, this is a chasm. A $5 gap between the two largest precious metals markets in the world is unheard of. It signals a major dislocation in the market, something that simply shouldn't be happening if everything were running smoothly. This raises a critical question: why? Why would buyers in China be willing to pay such a massive premium for silver? It's not just a little bit more, it's a significant extra cost. The answer is simple and profound. They can't get their hands on it anywhere else at a lower price. The physical metal is simply not available in the quantities they demand. This isn't about paper contracts or futures markets. This is about a desperate scramble for real physical silver. What we're witnessing is a classic supply squeeze, but on a scale we haven't seen before. The demand in the East is so voracious that it's completely detached from the Western paper price. They are signaling to the world, we will pay whatever it takes to get the physical metal. Let's break down what this means. The price you see on your screen, the COMEX or LBMA price, is largely determined by the trading of paper derivatives, futures contracts, options, and ETFs. For years, critics have argued that this paper market has artificially suppressed the price of silver. They've claimed that there are far more paper claims to silver than there is actual physical silver available to back them up. Well, what's happening in Shanghai is the physical market finally calling the bluff of the paper market. Buyers in China are ignoring the Western paper price and creating their own price based on the reality of physical supply and demand. They need the metal for industrial use, for investment, for wealth preservation. They are finding that the warehouses are running low. Think about the implications. China is the world's workshop. They are a massive consumer of industrial commodities, and silver is crucial for everything from solar panels and electric vehicles to electronics and medical equipment. If Chinese manufacturers are willing to pay a 7% premium for silver, it tells you they are desperate. It means their supply chains are at risk. They can't afford to halt production because they can't source a critical component. This isn't just investors speculating. This is real-world industrial demand hitting a supply wall. The Shanghai Gold Exchange, which also trades silver, is seeing its inventory levels plummet. Week after week, we see massive withdrawals from their vaults, and the stockpiles are not being replenished fast enough. The well is running dry. Now, let's look at this from a global perspective. For a long time, the flow of precious metals has been from east to west. But in recent years, and especially in recent months, that tide has turned dramatically. We are seeing a massive drain of gold and silver from Western vaults, particularly in London and New York, heading eastward. This physical metal is being bought up by central banks, institutions, and individuals in countries like China, India, and across the Middle East. They are trading their US dollars for tangible assets. This isn't a coincidence, it's a strategic shift away from a dollar-denominated financial system. They are losing faith in fiat currencies and are seeking the safety of hard assets that have maintained their value for thousands of years. The Shanghai Premium is the clearest signal yet that this great decoupling is accelerating. The Western financial centers are losing their grip on price discovery. London and New York can play their paper games, but if they can't deliver the physical metal at the prices they set, the game is over. Arbitrage is the mechanism that is supposed to keep global prices in line. Traders should be able to buy silver in New York for $72 and sell it in Shanghai for $77, pocketing a risk-free $5 profit. The fact that this isn't happening on a scale large enough to close the gap tells you one thing. They can't get the physical metal out of the West to ship to the East. The vaults are either emptier than we're told, or the owners of the metal are refusing to sell at these suppressed prices. They are holding on, waiting for the price to reflect the true physical reality. So what happens next? This situation is not sustainable. A $5 premium cannot last forever. One of two things must happen. Either the price in Shanghai has to come crashing down, or the price in New York and London has to rocket up to meet it. Given the relentless physical demand from the East and the dwindling inventories in the West, which outcome do you think is more likely? I believe we are on the verge of a major repricing of silver. The paper market is being exposed, and the physical market is taking control. We could be looking at the beginning of the end for manipulated paper-driven prices. The true price of silver is being revealed, not in the trading pits of Chicago, but in the physical markets of Shanghai. This isn't just about silver either. Silver is often called the canary in the coal mine for the financial system. It's a much smaller market than gold, which makes it more volatile and susceptible to a physical squeeze. What happens in the silver market is often a precursor to what will happen in the gold market. And what happens to gold has implications for the entire global monetary system. The message from Shanghai is a warning shot across the bow of the Western financial establishment. The era of easy, paper-driven price control is coming to an end. Physical reality is reasserting itself. For those of you who have been patiently stacking physical silver, this is the moment you have been waiting for. This is the validation of your thesis. You understood that the paper price was an illusion and that, eventually, the fundamentals of supply and demand would matter. That day appears to be arriving. For those who have been on the sidelines, this is a major wake-up call. The opportunity to acquire physical silver at what might soon be seen as ridiculously cheap prices could be closing fast. This isn't financial advice, but I urge you to pay close attention to what is happening. The dislocation between the Eastern and Western markets is the most significant development in the precious metals space in decades. It signals a fundamental shift in the global flow of money and power. The game is changing, and the price you see on your screen may not be the real price for much longer. What we are seeing is not just a temporary spike. It is a trend that has been building for months. The Shanghai premium has been persistent, but it has now exploded to a level that can no longer be ignored. This is a fire alarm for the global financial system. It's telling us that the trust in paper assets and fiat currencies is eroding rapidly, and a frantic search for real, tangible value is underway. The East is leading this charge, and they are literally buying up all the physical silver they can find, no matter the price. Don't be surprised if you see headlines in the coming weeks and months about delivery defaults, force majeure, and exchanges halting trading. When you have more claims on a thing than the thing itself, a crisis is inevitable. That crisis for silver seems to have finally begun. Thanks for tuning in today. This is a developing story, and you can be sure we'll be tracking it every step of the way. The implications are simply too big to ignore. Make sure you are subscribed and have notifications turned on so you don't miss our next update. This is a pivotal moment in financial history, and you'll want to stay informed. Until next time, stay safe and keep stacking.